It's one of the biggest debates, in fact, in Washington right now, and it's whether to extend the tax cuts for high-income earners that were passed during George W. Bush's presidency. They'll expire, of course, at the end of the year unless Congress acts. The standard arguments that letting them die will hurt the economy or that extending them will add to the federal deficit. But one investor says there is a hidden truth to the Bush tax legacy. The taxes actually went up during the Bush presidency for at least half of tax filers. Bill Frezza is a partner at Adams Capital Management. It's an early-stage venture capital firm. He also writes a weekly column on RealClearMarkets.com, and he's joining us from our Boston bureau right now. So, Bill, talk to us about your math here and how you arrived at this conclusion that indeed taxes went up for a lot of folks under Bush.
Well, it's a fascinating story for many reasons, none the least of which no one's telling it. But the data is all on the internet. If you go to www.irs.gov and you search for shares of AGI from 1986 to 2007, you get a spreadsheet. If you add the spreadsheet up, what you learn is that George Bush was the biggest tax collector in American history, and he presided over the biggest increase in taxes if it's actually dollars that you're counting. Bill Clinton collected $5.657 trillion during his 8-year. George Bush collected almost $7.5 trillion. And $1 trillion of that additional $1.8 trillion came in from the rich. The rich paid more taxes under George Bush, not less. The only group that paid less taxes under George Bush than under Clinton were the poor.
So how do you account for this then versus sort of the conventional wisdom? I mean, is it a matter of what type of taxes you're talking about here, that it's what you talk about as the marginal tax rate versus the actual total rate that folks pay?
People spend a lot of time worrying about the marginal tax rate because that's the only thing that pundits and analysts and politicians want to pay attention to. But at the end of the day, it's the tax rate you pay after all your deductions, exclusions, and whatnot that matters. And the blended tax rate, the tax you pay on all your income, under Bill Clinton was 20.6%. Under George Bush, this is for the rich, it went up to 21.3%. So not only did the total amount of money the rich paid went up, the tax rate they actually paid went up, even though the marginal rate went down. And that might have seemed like a paradox, but there's a very simple answer. So
the conclusion, what conclusion can we draw from all of this in terms of how it informs this tax cut debate that's now going on, whether those marginal tax cuts should expire?
Well, debates are always better when there are facts involved. There seem to be precious few in this. It's very difficult to make counterfactual arguments about what would have happened had the tax cuts not been made, or what might happen if tax cuts are made. The facts of the matter are you can see where the dollars came from. You can see where the dollars went. There are people who believe, including myself, that rich people actually respond to incentives. Just like many folks here in Massachusetts love to drive over the border and buy their liquor in New Hampshire because the taxes are lower there, rich people change their behavior. Taxes are lower, they expand their businesses, they create more jobs. They make more investments. If you remember the idle rich, let's say you were fortunate enough to inherit a bunch of money, your tax advisor shifts your portfolio. You move out of municipal bonds and you move into junk bonds. Those junk bonds actually fund companies that create jobs. So the reason the rich could pay a lower marginal tax rate and yet deliver more taxes to the government is because they make the pie get bigger. And if the pie gets bigger, everyone is better off. The problem coming up now is the pie's getting smaller.
So it sounds like you think that those the tax structure should stay in place.
I think we're heading for disaster if we increase taxes in the middle of a recession. We've seen that happen once before, and it turned a recession into the Great Depression.
Bill, I'm curious how your particular experience informs this, because obviously you're dealing with small startups as a venture capital firm. What are you hearing from these folks right now in terms of what they need? There's been a lot of talk about small businesses. What are you hearing from them in terms of what they need to spur business along?
Well, venture capital is a tiny, tiny segment of the entrepreneur community. It gets all the press, but it's actually a very small number of entrepreneurs that get funded from venture capital. Most get funded from friends and family and even local banks. The companies we invest in are high-tech startups. They don't use credit generally. They use equity. And in fact, the venture capital industry right now is in a world of hurt. We've almost near collapse compared to where we were at the peak. Part of this is good because the industry got too big. But one of the biggest risks financing new startups now, whether it's a cure for cancer or a new engine to increase gas mileage, one of the biggest risks is financing risk. Where's that next round of investment going to come from? And the market out now is a disaster.
So what needs to happen for that to improve?
People need to reduce uncertainty. No one knows when the next shoe is going to drop. No one knows when the next tax increase is going to come. Right now, they're gunning for venture capitalists. They want to take the tax rate we pay on our carried interest and jack it up from 20% to 39%. Believe me, that's going to change behavior. The rich didn't get rich by being stupid.
What do you think of the measures that have been taken thus far? I mean, the Fed, for example, keeps injecting liquidity into the system.
Well, if you want to create inflation, that's the best way to do it. Inflation is one way to get out from under the debt. So we're planting the seeds now for a massive run-up of inflation as soon as the economy recovers. Let's hope that happens, because if the economy doesn't recover, we're in a downward spin.
Okay, Bill, unfortunately, we're out of time, but obviously this tax issue, a hot one. Bill Frezza, thanks a lot for joining us to talk about it. Appreciate it.